Everybody, we are back today. We are being joined with Miss Nikki Shenk. Nikki, how are you?
Doing well. How about yourself?
I am good. Yeah, I know. Finally. And I just realized that I don't even have my shoes on. And I'm just going to roll with it. So, Heather unfortunately was not able to join us today, and she's going to miss out on some great information that we're going to be bringing to you guys today. So, Nikki, let's just go ahead and dive in. You know, you've been doing the mortgage moment with us for quite a while now, and you've helped bring some great insight into the mortgage world. But with all of the changes that have happened recently, rates have dropped, you know, we're at the end of the year. Where do we sit right now, year to date?
There's so many changes this year. So one of the biggest questions I get, I'd say is, first of all, is there any grants left? What's the big change for the realtor commission stuff? I mean, these are all questions I get literally every day. So wherever you want to start, do you want to start with just...
Let's start with just the market.
Okay, the market in general.
Yeah.
Well, it's I think there's more confidence in the market right now. The Feds, as you know, they dropped a half a point. Now, just to clarify for everyone, that half a point, so a prime rate is a home equity. That's the government rate that would change right away. Mortgages, our rates are based on mortgage-backed securities or 10-year treasuries. Those are more forward-looking, so they're going to adjust a little slower. So our rates all of a sudden aren't overnight 1 point down versus a home equity would be, you know, a prime rate. So rates are coming down, so it does help increase confidence. I'd say I was busier over the last 3 weeks, a lot more offers. So people are starting to have more faith in, you know, that we're going in the right direction for the community. Do I still think there's inventory shortage? Absolutely, right?
Yeah.
Right now, I think housing, you know, amounts, loan amounts, everything is, I think, stable overall, but we're going in the right direction going into, you know, next year. We're all preparing for fall. There's normally a little slowdown as we get closer to the holidays in general.
Yeah.
But I think we're in a good place, to be honest.
So with rates coming down, at what point in time would you recommend somebody look at potentially refinancing their loan?
Right. So the rule of thumb we use in the business is 1 percentage point down. You really have to, there's a lot of factors. Did you just get your house? Did you pay points when you closed on your house? You know, right now, if we know we're going to go into a refi market and we don't know what the Feds are going to do next year, if they're going to drop a full percentage point like they promise, we'll see. Then people might want to wait. But if it's refi and you're already sitting at 8% right now, it's definitely worth a call to your lender. You want to get in there and yeah, it's a calculation. It's individual for everyone, but rule of thumb is 1 point.
So what would you say is that sweet spot for timing though? You know, maybe they bought it 6 months ago, 3 months ago, 2 months ago. What's that sweet spot that you don't want to refinance within a time frame?
Well, there's some limits our government puts on us. So if you're doing just a basic rate and term, so rate and term means you're just borrowing whatever's on your house. Is it a home equity? You did, you know, repairs to your house, your actual mortgage. Those are going to be cheaper loans, and literally you could do those technically the day after you close, right? Not that we want those extra fees right away. But if you're doing a cash out refi, there is a 6-month seasoning rule. So if you wanted to roll in your credit card bills, because now you feel like they're 21% or something, you're going to have to wait 6 months on that. So as far as a sweet spot, I hate to say, keep telling you it's individual, but it truly is. It can make sense if the rates dropped. If someone, for example, this spring, we're at 8% when they closed, and rates are now in the 6s, if you think rates are going to be stable, do it now, or maybe it makes sense to wait the year. It's hard to believe the government, they truly are going to do that 1% cut, right?
Yeah.
So if they're going down 2 percentage points, I'd say do it. Um, it's really what you have the stomach for and what your risk factor is.
Yeah.
Mhm.
So when you look at where we were last year to this year,
Mhm.
and obviously you definitely feel that we are in a much more positive location with mortgages. What would you say is one thing that you are hearing from some of the buyers that are now going under contract that decided to wait?
I'd say buyers are they're realizing as rates come down, they're having more competition, right? There's going to be more offers on houses because as the rates go down, more people can afford it, right? So you're going to have more competition for these offers. They're also getting a little smarter as far as trying to predict those rates since it's in the news all the time. So I'm getting a lot of questions. Should I buy points right now? And probably good advice not to buy points necessarily. If you're going to refinance, buying a point is like paying future interest. If you know you're going to refinance in 6 months, 1 year, you probably don't want to pay that future interest. So I think buyers right now are much more conscious of what are my rates, what is my points on my rates, which is always important to look at that APR. Just going back to that, this is your mortgage rate. What's the APR? Because that's all your closing costs. That's your points when you're out shopping for a mortgage. So
Yeah. So pull out your crystal ball.
excellent.
Where are we going to be next year?
Without any politics, because it's really hard to say. I mean, there's lots of promises on both sides of different programs and the rates. Um, Rates will continue to fall as long as we are confident in our market, inflation doesn't keep growing. So, if my crystal ball could predict, I really do believe next year I'm going to be really busy with refinance because everyone that's bought in the last year that are at 7, 8%, they can start refinancing now. Um, and I also think if there's more first time home buyers, programs, the more you can add to the mix. Because the problem with home buyer, you have all these incentives, they run out in such a short time. So the more we can offer, the busier we will be. But my crystal ball also says we're still stuck with this inventory. I mean, have you seen
Mhm.
the inventory change? I mean,
It's slowed down majorly. A lot of people complain about the interest rates.
Mhm.
And I always, you marry the house, you date the rate, you can
Correct.
refinance easier than you can move.
Yep.
I actually had this conversation with a buyer the other day that called me and they're like, well, I feel like nothing's going to happen. I'm like, yeah, well, you've also not listened to any of my advice.
Right. Right.
Well, I don't want to pay over asking. Well, then you're not buying.
Right.
You're just not right now. And that's completely fine. That is where you want to be. And that it's not my place to move that needle
Right.
because you don't want it moved. And I'm good with that. But in a year, the house will be more expensive now than what it is then, or than what it is now. Say that right. And yes, you'll pay a little bit more in interest for a year or two until you refinance, but
Mhm.
you don't want to just sit here on it because you're going to
Mhm.
pay more in the long run off the value of that house if the market continues to rise the way that it has been.
Correct, and all
Yeah.
the appreciation over a year. I mean,
Hmm.
your that house could, literally. I mean, every year. What's our prediction? 3 to 5%. It you're missing out on all of that as well, being the homeowner.
I've gained just in my house in 3 years, God, um, almost 70,000.
Yeah,
Like,
yeah, you're
I,
missing out.
I think people need to really realize that right now of you don't you don't want to miss out on a lower price. Take that, know that the interest is going to be a little bit higher. Let's sell your old home, still get top dollar for it,
Mhm.
and refinance down the road for
I
sure.
I agree. Yep, and don't buy points at this point. Don't pay
Just leave
future
it be.
interest if we all think our crystal ball is saying next year is going to be lower. So I'd say, yeah, keep the points out of it if you can.
Yeah.
Yeah.
Well, guys, definitely tune in. We've got some more with Nikki coming up. We're going to be talking about the changes to what the lending side of things is seen with the changes of the industry way of processing commissions. And we're going to take a deeper dive into preparing for grants in 2025.